Okay, this is Mr. Parker, your instructor. Here I'm going to illustrate another of the two test problems you'd expect something fairly similar to in problem form on this week's test 1 due to the cancellation Monday night of the scheduled review session. Keep in mind you can go through all pages of the chapters 1 through 3 Moodle books for the other, what would have been the other portions of the review. But I want to start with exercise 3-19A data, page 181 of your 9th edition of the Edmonds text. You can access it on Connect. If you don't have a hard copy, I need to really get moving because I went over the time limit on my first attempt to this. But here we're told that Morgan Company on December 31st of 16 had the following normal account balances in its ledger. Now they don't tell us what side balance that is in each case, but that keyword normal gives us what we need to know in order to prepare the requested adjusted trial balance. Now they didn't stress that it's the adjusted, but I'm going to assume it is in order to enable us to use this data for our first 3 financial statements that I'll request on the test you go on to prepare with these what I consider to be adjusted numbers. Now for best form we list asset accounts first, and you'll find several of those: cash and accounts receivable and prepaid rent and office supplies. Of course on the test you'd be writing all this on blank space and provided at each stage of the problem for you to show your work there. I'm just happening to use Excel. I needed some kind of recording forum, but they don't tell us what side balances these are, but being assets, normal side is left or debit. That's the side that increases asset accounts. And so I'm listing each of these asset balances in the debit column. Next, for best form, we look to list our liabilities accounts, of which you're going to find here a couple. Accounts payable and unearned revenue, which is not a revenue at all. It's where we owe services or goods to some customer who has paid us their money in advance, but we owe them the work or the goods. Being liabilities that increase with right side entries, these are right side normal balances accordingly. So that unearned revenue, despite having the word revenue in its account name, is not a revenue temporary account. It's a liability. For best form, our couple of permanent equity accounts next, common stock and retained earnings. And as they stress, for that one account, retained earnings, at this stage of the process, it is the one account still showing beginning balance. That's to be expected at this stage in the process because the closing process that we don't conduct till after the financial statements for the period are complete. Only then do we move the temporaries to the retained earnings account itself, even though those events have been changing in substance all along throughout the period. We haven't yet been putting them there. But we'll list it. Just be aware that is the one account at this stage still showing beginning. That's okay. Right side, as increases, our couple of permanent equity accounts is normal credit for those. Then the temporaries, like dividends, that we record with left side debit entries, therefore has left side debit balance. Our revenue temporary accounts, of which you're going to find service revenue, just one in this case. And we record revenues with those right side credit entries, therefore they have right side or credit normal balances, followed by lastly our expense temporary accounts that we record with left side debit entries and therefore that have left side debit normal balances. And we see 3 of those in this list. Salaries expense, operating expense, and advertising expense. And I think I'll just do a formula to speed up the column total. And you'll see we're in balance. And I assure you the test problem data is a self-balancing set of data. So even if you show out of balance at that point, it's not going to mess you up. You can keep moving to the requested financial statements, the first three of those on blank space each provided for you at those new stages. This is for the year ended 12/31. Now the income statement, of course, we're going beyond what they asked for here in order to make it most like the test problem expectation. It's a total 26-point problem, only 5 points of which is the trial balance, and you would get partial credit so long as you're comfortable that you've listed most accounts in grouped with like account in logical order for good form in most cases, and most in the correct column. You get some partial credit there, so don't get too hung up there on the trial balance. Just keep moving at that point. But what the income statement shows is revenues and expenses of the period. We earn one type of revenue, service revenue. We incurred three types of expenses: salaries, operating, and advertising. And I'd probably want to of course, we know the service revenue we earned this period, $86,000 from our adjusted trial balance. Even if we had put its balance in the trial balance of the wrong column, we still know it's $86,000 there that we earn, and it is a self-balancing set of data, I assure you. So salaries expense, we know we incurred $18,000 from our adjusted trial balance, operating $41,000 of that expense, and advertising $3,500. I need to put it down here. And since there's more than one type of expense incurred, I'd be inclined to total those expenses. Totaling $62,500, that when subtracted from the revenues, if I just put in a formula of what's that, D30 minus those expenses, D35 is $23,500 of net income. I'd probably have drawn a line here, but I need to keep moving. I only get a 15-minute time limit on making these particular videos. So next, you'll be prompted on new blank space provided at that stage to do your statement of changes in equity. This for the year ended 12/31/16. Now what that shows is for each of our two permanent main equity components, common stock and then retained earnings, where each began the period, the thing or things that changed each during the period, and where each went on to finish or end the period. Now technically we don't have quite enough information from the trial balance data to address entirely the common stock changes, so I'm going to make an assumption here in a minute, and I will clarify with an extra sentence at that point on the test. So look for that extra sentence clarifying how that ending common stock came about. What we do know is that common stock finished at 80,000. We don't know how it got there technically. So I'm just going to make an assumption here. Now, if common stock changed, it would be because we got some new infusions of assets from owners during the period that increased their common stock claim accordingly, what a corporation calls stock issuances. So the assumption I'm going to make here is that we began at 60,000, that we did additional stock issuances, 20,000 during the period, and that's how the ending 80 that we saw there came about. So look for that extra sentence. Now we do know beginning retained earnings, because that is the one account at this stage still showing beginning of 9,000. In substance, three types of events change retained earnings. Revenues increase in substance retained earnings. Expenses decrease in substance retained earnings. But we already told the user all about those in the income statement in detail. So instead, let's just summarize those here as the net income single figure that includes all the period's revenues less all the period's expenses. Now we get that from the bottom line of the income statement there. So make sure that's where you're getting that net income from here on your statement of changes in equity. Now dividends, we know we declared out 8,000 of those during the period. You may want to show those as a minus, that's up to you, but do remember to subtract them. Of course, net income never includes the dividends because dividends are never expense. They're never an income statement item. So we do have to show those dividends here separately for the first time on the statement of changes in equity. Again, I need to keep moving, so let me do so. Let me move to the balance sheet, the third and last of the financial statements I'll be requesting of you in the test problem. In real life, you'd also go on to prepare a statement of cash flows, but we'd have to have more information to do that. No statement of cash flows in problem form on the test. But what the balance sheet does is proves in detail the accounting equation, and as of the end or last day of the period typically for the company. And in proving that accounting equation, it lists the assets, the liabilities, and our couple of permanent equity accounts that we repeat there, those true ending common stock and retained earnings. We'll get to those in a sec, but the assets, we had some cash, some accounts receivable, some prepaid rent, some office supplies, or simply supplies you could have called those, and some land. And we know those balances from our adjusted trial balance. So the cash, 90,000, 15,400 of accounts receivable, prepaid rent from our adjusted trial balance, 5,600, 2,500 of office supplies, and land, 30,000. And you'll want to total your assets there. I'm just doing formulas here, but of course you can manually do this math on your test problem. We had some accounts payable liability we owe and some unearned revenue where we owe services. And I'd want to total those liabilities. The accounts payable from our adjusted trial balance, 7,000, and 32,000 of unearned revenue. I'm going to go ahead and total that in my head. That's 39,000 to save time. Common stock, 80,000 ending from our adjusted trial balance. But when it comes to retained earnings, get it instead from where we just derived. It's true ending balance there on the statement of changes in equity. We needed beginning from the adjusted trial balance for it, but here on the balance sheet we need ending. Let's total equity, and that's 104.5. And let's show total claims, liabilities, and equity combined, which is the liabilities and the equity 143.5, equaling our assets.